The global oil market is likely to see large-scale supply disruptions due to the sanctions that could limit Russian oil exports. Starting in April, 3 million barrels per day of Russian oil output could be shut in as sanctions take hold and buyers shun exports. This is the message that the International Energy Agency sent to the oil industry in its latest edition of its oil market report. The agency had other bad news for the oil markets. The IEA forecasts that global oil demand growth will decline due to a slowdown in economic growth driven by the latest surge in commodity prices and Western sanctions against Russia.
Similar examples were 1990, the Gulf War. I was in the trading pits then, I remember it well, and 2008. And every single time you correct about 60 to 70% in a few months based on one key factor, demand destruction. And I see supply and demand issues worse now than they were then.
The IEA revised down its oil demand estimates by 1.3 million barrels daily for the rest of the year, which would mean a 950,000 barrel per day decline in the annual rate of oil demand growth. The implications of a potential loss of Russian oil exports to global markets cannot be understated, the IEA wrote. Russia is the world's largest crude oil exporter, exporting 8 million barrels per day of crude and refined oil products to customers across the globe, the IEA said. Alternative suppliers that can step in and fill the void are few, and not necessarily willing, the IEA added, mentioning OPEC+, which is sticking to its original agreement of a gradual ramp-up of production, and Iran, whose return to international oil markets would be insufficient.
The biggest issue with OPEC Plus is the lack of spare capacity. There just isn't very much in the group, and that's why they have been cautious in increasing production. And even when they do increase by 400,000 every month, only half of that is coming online. That's what's really constraining them.
The agency will release advice on how to reduce oil market demand more speedily later this week.